Welcome to Markets Now. I'm Michelle Rook with Garrett Toy Ag Trader Talk, and we're going to close mostly higher on the day after Christmas on Thursday in both grain and livestock futures trading. Garrett, let's talk first of all about the corn market. A nice breakout, a 6-month high, and I think we're going to close here, it looks like, above the 200-day moving average. How impressive is that?
It's good. I mean, it's highest close since June, and that means that it's the highest level that we've had since the majority of the growing season, essentially the June acreage report. So, the spreads are leading here. I mean, it's not giving us much of a reprieve, though, and new crop D's 25, 442.5 is kind of our highs here. And while we're trading to new levels or new highs for the move in March and May contracts, D's is not. So a bit concerning there, especially as focus is shifting to new crop, but giving us an opportunity in old crop corn for sure.
Looking at the old crop contracts, is this the kind of chart breakout that will keep the funds going long, or what do you expect them to keep doing here? Will they add to their length?
The funds seem like they want to be long corn, and they want to be short beans and they want to be short wheat. Perhaps that's why wheat has been such a difficult market to track. But, I do think the general consensus is the demand market is good enough in old crop corn that, perhaps that keeps, if we do have increased acres, the strength in the March, strength in the May, strength in the July contracts keeps corn supported. However, once those contracts go off the board, then focus shifts, firmly to new crop. That could pull things, lower. If you look at these old crop, new crop spreads, July D's type spreads, those spreads are very reflective of a corn situation that is much tighter than what we really are. So that tells you that we're not really trading what the current stocks to use is implying. Some people would analyze that and say, well, the corn situation is that much tighter. Well, no, to me, it tells me that the new crop situation is already starting to get factored in here, and that's weighing on D's.
Gotcha. What about soybeans? A pretty good close here. We can always move the market a little bit more when we have light volume, but what was your sense about the push today? The funds are short there. Were they just covering shorts, or was this China or South American news, or what?
No, I mean, I think that the telltale will be, how we finish this week into next week, and it's going to be fully holiday trade next week. But, we at least stopped the sell-off where it looked like beans were going into the abyss. And now you've got perhaps some trap shorts in here. I think that, there's some, if you talk to 10 analysts, I think 8 would, and ask them which direction they think the next direction corn or what direction soybeans are going to go to, I think 8 of them would say lower, right, as long as there weren't any problems with South American weather, et cetera. And just even on the U.S. S&Ds alone being fairly, ample. So, I think what this does, and we get to this $10 level or this $9.90 on Jan beans, back to the site of the breakout. We've seen these type of trades before where we break out and then we bounce, but we can't take out the area of the breakout, and then we continue to slide lower. Either this is an area for the people who didn't sell the first break to make some sales, or this is a bottom in here. I think the one thing that is for certain, the fact that the beans have traded in the sideways range for a good month and a half, the fact that this is a break, this is pretty decent resistance in here, and it's going to be a shelf of resistance or support fairly long term either way.
Yeah, no doubt. But we have not had really any major crop issues or weather issues in South America, and we keep hearing of China business, but we haven't gotten major confirmation of that big Sino grain purchase yet.
No, and they're going to, with it being government purchases, first things first, any government purchase by the country of China is not subject to tariffs. They're not going to charge themselves tariffs on those imports. So that's one thing to keep in mind. Secondly, there's been some dryness issues in Argentina. The market's kind of discounted. Even the weather guys have discounted it, saying, well, it's going to be dry, but it's not going to be hot. And the cooler temps kind of tempered it. Well, now, a week to 10 days out, it's still dry, and there's some heat building. So maybe that's adding some things. As far as Brazil is concerned, it still seems like the majority of the ideas for crop production ideas are increasing. So at this point, we do have a little bit of weather uncertainty. It's the 1st of January. It's August timeframes, if you will, as far as harvest is concerned here in the U.S. I think that how this crop finishes is definitely going to tell us whether we're going to have a 160 type crop, a 170 type crop, or 180 type crop. And if the Brazilian crop is getting bigger, then that allows us to potentially lose some issues in Argentina. And the interesting thing to me is while these U.S. crushers are really struggling to find a home for meal, it might be market setup as well, where these new shorts in the market might be getting spooked a little bit. But at the end of the day, it still seems like there's plenty of meal around, and it's not really that big of an issue to the S&D.
Right. Okay, wheat market ended higher today. Was it just following corn and soybeans?
It certainly feels like it. There's been production cut talks around for 30 days. The currency gyrations, there's just, we had the big Algerian tender over the holiday. And we just can't see. I think that the market is looking for, well, two things. I think the market is disconnected. The Chicago soft red wheat market is disconnected from the world market. I don't think it's necessarily a big influence world trade. I mean, the world cash trades have kind of divorced themselves, if you will. And this is strictly a function of a potential, the market spread against another market, whether it be corn or soybeans, that sort of thing. So I think it's mostly a follower here. There really isn't much for news in the wheat market. Kansas City kind of led the trade higher here. There's not really much for news. And I do think it's interesting. The stocks report that the MIAX put out on Tuesday, I guess I have to think about it with the holiday shortened week. These hard red spring stocks are the tightest that they've been on record out of Superior, not just for this time of year, but ever. So, it's kind of an interesting thing here that we're in the middle of harvest, or pardon me, little holiday hangover there. We're in the middle of winter, and these hard red spring stocks are extremely tight.
Yeah, I've heard that there's kind of a bid for cash when you have high quality in some of those areas. So maybe that's how they're rectifying that situation. Let's talk about the cattle market. We did have a strong finish today, considering that we've not had a lot of cash to really lead the market. So was this just technical?
I think last week, last week was technical. We traded down the 200-day moving at 186. To me, to give you, if I had to give you an explanation of what it is, I think it's a relief rally is the best way to describe it, because when the Fed cut rates last week, we had the divergence between Fed cutting rates and the bond market rallying, and we've got expectations of bond markets versus the Fed going in opposite directions. The Fed also came out and talked about adjusting their views on inflation from a 2% target to a 2.5% target. The equity markets didn't like that. And when you've got the cattle markets loaded up here with a lot of length in it, and it was holiday trade, and there really wasn't much else to talk about, we followed the equity market sell-off. And now that the equities have kind of stabilized here, in the cattle market have reverberated back towards this 190 level. We'll see what kind of cash trade we have. Holiday purchases are over. The holiday demand seems to be covered, and we're into really kind of this lull until after the first of the year. We just kind of reversion to the mean, if you will. 190 kind of seems to be where we're a safe space between the 200-day moving average and the recent highs.
Yeah, we just kind of keep pivoting around that area for sure. All right, so the hog market did come back and all but the nearby contract here during the trading day here today, but it looks like we put in a high there. So are the funds going to keep kind of liquidating this record long position they had, and is the market going to keep consolidating?
It's a good question. It's end of the year, and I do know we haven't really talked about it, but with the rebalance, I do believe they're going to be some small buyers after the first of the year. But I know they are in the grains. But from a chart standpoint, it looks like we're forming a wedge here. If we see some sort of a breakdown If we see some sort of breakdown below 82, call it 82, 82.67, if you will. That would be a breakdown of the wedge. But, the last 3-4 sessions, we've seen a fairly decent round of buyers or longs defending this $84 level. So I think we're just kind of consolidating here. Definitely a lot of sellers above 88, but, we're kind of stuck in the mud and waiting for our next direction.
All right. Thanks for joining us, Garrett Toy Ag Trader Talk. That is Markets Now.